Okay, I'm gonna move through what's it called, a few screen presentations. Anyway, so I'm gonna get started off. Keep in mind, if you guys have any questions, feel free to ask throughout the call. You can feel free to stop me or what's it called, just speak out if you have something to say. But my name is Ethar Al Aasmi, as he mentioned previously, and I have my own market moves community as well. And what we focus on is a lot of technicals and also fundamental analysis. But today for the session, I will be speaking about technical analysis because this is something that I genuinely rely on big time when I'm day trading, because there's a difference between day trading and between long-term investments. So I'll get into that as I'm going through the presentation. But let's get started. So the first thing, I want one person in here to just briefly explain to me what's happening behind these candles. Could someone volunteer? And if you don't volunteer, I'm going to pick on someone randomly. So the floor is yours. Okay, looks like I'm picking on someone. Gonzalo, is that how you say your name?
Gonzalo.
Can you explain just briefly what is happening behind the candles?
Larry, there's a big drop of the price and a big red candle, like four consecutive candles, and the last one very big. And now it looks like it's consolidating. I don't understand very much of technicals, but for me, what I'm looking at, it's what appears.
Okay, that's a great explanation, actually. I've had people in the past just say, oh, it went up and then went down. I mean, fair enough, really, what's happening. But from a perspective, from a technical analyst, they could say there's more green candles in the beginning, so the buyers are in control here. And then it starts to have a quick fallback here. Which you can think of it as a correction because it's not a major fallback here in the beginning. If you see a huge correction, so whereas the fall is a bit more stretched out, then that could signal for a potential reversal. But in this case, it was a correction. And then the buyers picked up the momentum again. And it's going at a steep angle as well. So that's something to watch out for, because the steeper the angle, the more the buyers are actually in control. And then it starts to slightly consolidate, and it looks like it might be a correction. However, it turns into a reversal. And then now the sellers are in charge from this big candlestick. It really shows us that the sellers are the ones clearly in charge, since we don't even have a big candle wick, which is basically one of these things here that you see. These are all considered wicks. So there's not even an upper wick. So that shows us that the buyers are not even slightly in control, and it fully went down with the control with the sellers, and then again it started consolidating, as you mentioned. And also from another perspective, you could say that where the prices are moving above the moving averages, so that clearly shows us that the buyers are controlled in the beginning, and then once it starts moving below the moving averages, it shows that the sellers are the one who are in control. So this is just how you read it from a technical analyst perspective. And of course, there's other things that we can consider as well, which are trading indicators, patterns, and so forth. But for you to be able to have that type of exposure, it's very important to understand how to read the candlestick itself, because this is going to be the foundation for us to become successful investors or traders, or however you may see yourself. So on a brief explanation, how it works is, let's say for a green candlestick, the price always starts below where it closes. And then it starts, let's say, at the bottom, and then it pushes all the way upwards to the highest point here at the top of the wick, and it goes to the bottom of the wick during the day, during the hour, depends what time frame you're looking at it, but this is the highest, the lowest it gets to. And then of course the price always pushes back up and closes above the opening price up here. Same thing with when the sellers are in charge. So the price, let's say, opens up here, and then it pushes to the lowest aspects, the lowest of the candlesticks, and again, the highest it pushes up, the price is to the top of the wick, and it always closes below where it starts. And this is just how it is from from a brief explanation of how to read a candlestick pattern, this is going to be the foundation of almost everything that you do when it comes to analyzing the patterns or placing a trade. This is something that you must really have honed down, because if you don't understand how the basics of how to read a candlestick, then in my opinion, there's no point of trying to day trade, swing trade, and so forth. And actually, it took me a while myself to understand it, because it looks easy in the beginning, but then it becomes a bit confusing, especially if you're not actually applying it yourself. So this is something that's crucial to have an understanding of. And I had to watch countless videos for me to really have an understanding of candlesticks, because I got confused with the wick sizes before, what it means if we have an abnormally large wick or an abnormally small wick as well. So the more you practice, the more you try to identify it, the better you're going to get at recognizing this. And of course, now, what is technical analysis, correct? But before you understand what technical analysis is, it's important to compare between technicals and fundamentals. Because sometimes people say, oh, I'm not a technical trader. I want to focus mostly on the fundamentals. And I never say you're wrong or you're right. It's crucial for you to have an understanding the key differences between the two, because for each market, it's going to differ. Like, for example, I'm heavily invested into crypto for a long time now, and I understand the way the fundamentals of the market works. Whereas other people might be confused on how does crypto work and why would you invest in such a thing. If you don't understand the fundamentals behind it, then of course you're not going to understand how to invest into it from a technical aspect if you're trying to day trade or swing trade and so forth. But again, just from a brief overview, fundamentals focus big time on the companies and the asset values. They're using the financials, the news, the economy, and of course, they're having a long-term perspective. And this, of course, is what Eduardo is focused on big time. And it makes sense because he's investing into stocks. And for stocks, of course, I 100% agree. You need to have a strong fundamental analysis if that's where you're choosing to put your money in. And then, of course, from a technical perspective, this is now where we're focusing on the price charts, the patterns, indicators, trends, understanding what support and resistance is. We're focusing on short to medium term perspectives. And of course, even when it comes down, for example, with cryptocurrencies, you don't necessarily, I'm not saying that I strictly focus on the technicals, but I do that only when I'm focusing for short to medium term perspectives. However, again, if it's a long-term perspectives, I focus on what? The fundamentals. And now that you have an understanding of the key differences between the two, and also another thing to mention is that never ever try to say, okay, I'm 100% going to focus on fundamentals or I'm 100% going to focus on technicals. This is something that I just think is going to get you stuck down a rabbit hole in the future, unless you're planning to 100% hold, let's say, the security or the asset you're investing in for a long term, then okay, fundamentals make sense. But again, it depends on the type of market that you're entering, right? And the way that the fundamentals and the technicals will play a big difference in whichever market you decide to go in. So this is something crucial for each market you go into. Try to understand the fundamentals, and also then once you have a clear understanding of the fundamentals, then you can apply the technicals. Okay. And the types of trading that exist, of course, you have day trading. This is something that if you're going to be focused on the charts every single day, then you might become a day trader. Or if you're holding a job, like me, for example, as well, I'm focusing big time on swing trading, because I can't be sitting there and trying to analyze the chart from morning to night. And actually with swing trading, this is something that I think is something that if you have a job, then you could 100% focus on. And I'll give you an example of just briefly like how you should go about it if you're gonna be focusing on on swing trading. What I always do, of course, is before I invest, I always look at things from what's it called, from the day view. Oh, this is on a minute chart. Okay, I always look at things, of course, from the top overall view, and I'll try to identify my resistance levels and where the market direction is heading. I always look at it from a big overall picture from a day chart. And then after that, I'll show you how I do my analysis in a bit. Then after that, after I understand the key trend of where the market is heading, whether if it's right now in a downtrend or maybe we're going to have a potential crossing of an uptrend soon or a reversal, then I look into things from the 4-hour time frame, because now we need to zoom in and look at the picture from a deeper angle. So this is going to be a crucial point, because now I'm looking for opportunities to, like, let's say long a trade or short a trade. I'll look at things from a 4-hour perspective. And then once I kind of understand the way I want to go about the trade, then I start looking at it from a 1-hour time frame, because now I'm looking for my entries. I'm looking at how the buyers and the sellers are reacting, because sometimes I can have my trade be 100% precise according to what I believe what will happen, but then again it goes south or it goes north, right? But the way I can identify early on if it's going to go north or south, I look at the hourly candles, and then I try to read how the buyers are behaving, or how the sellers are even behaving as well. So again, if I was to write something down right now, look at it from the daily, 4-hour, then hourly charts. And then let me go back here. Where was I? Okay, let me go. If you guys have any questions, feel free to interrupt whenever. I'll be more than happy to answer your questions. Then again, as I mentioned, one of the key things that all traders and even investors who are trying to look at things from a long-term perspective is to identify your resistance and support lines. So this one here, some people get confused because support can sometimes become resistance, and resistance can sometimes become support. But from a high-level perspective, you have support is where the price always jumps back down to. You can think of it as the baseline. The price is typically sitting on this support. And then resistance is where the price always goes up to, but sometimes it doesn't necessarily pass it, like here. Or of course, most often than not, the price will end up passing resistance at one stage or another. And these two things can actually play hand on hand, because one day you have the resistance, and then it becomes a support, which happens frequently. So you need to be able to identify these things. I can show you guys quickly as well on a chart how to identify it. Let's say we're looking at things from the 1-hour time frame. I'm gonna the way I do it usually is I would look at it from the daily standpoint first, but just for a purpose of the discussion today, well, I can clearly see that here we have our support at multiple levels. That's the thing. You have current support right now standing here for this aspect here. But then again, you had the previous support here as well, right? So it's not ever going to be a strict line. You need to understand that support and resistance will always be zones. So never get it confused and have someone tell you that, oh, it must be where, let's say, 3 lines meet, or you have 3 touch points, that becomes your support, or that becomes... No, if you're going to think of it from this angle, then you're probably going to miss out on the big picture all the time. So always think of it as zones. And then here you could say this was a clear resistance because the price was trying to jump off of it actually multiple times. Here at one point you had, like in this aspect here, this was here a previous resistance. And then you have a previous resistance, you could say, up here as well. But again, I make it as a zone, because it's never going to be a clear specific resistance or clear specific support. And it really depends, again, on the market that you're dealing with. But from a crypto sense of view, the market is super volatile. That's why the support levels might be slightly more spread out, because within a matter of minutes or seconds, you can have like 5%, 10% moves, whereas in stock world, having 5 to 10% moves within a few minutes is something that's unrealistic. So you need to identify the type of support and resistance that you're drawing based off of the market that you're dealing with as well. So that's just on a quick high-level view of how to identify them. But again, another trader could say, no, you also have previous resistance here. which it's fine. You can have multiple. It doesn't have to be 2 lines. It could be your first resistance touch point, second one, third one, fourth one. You can have hundreds of resistance if you really wish, right? But again, this is just how you identify things from a high level perspective. And again, I always suggest that you look at it from the daily chart to identify your support and resistance. And then when you go down and look at things from the hourly chart, you kind of already have it identified from a bigger perspective. So you can be able to now focus on identifying patterns, charts, and trend lines and things of that sort. And so now that you guys have an understanding of this aspect, because most traders focus on support and resistance, the most successful traders that you're gonna have, this is what they're trading in between. No matter how difficult it gets or how hard they try to make their methods to look like, this is truly what they're focusing on. And if they say otherwise, then if they're not telling you that they're focusing on support and resistance, then I wouldn't even take advice from that trader, because this is the most crucial aspect when it comes to trading. And then as for chart patterns, the way that chart patterns really form is basically from the trader psychology. This is why we have chart patterns and why they're working the way they are. So when people say that, oh, chart patterns are false or not, no. Chart patterns more than likely will probably manifest onto the charts, because you have thousands and hundreds of thousands of people, millions of people around the world who are using these as visual clues. So they're going to have a higher proper of success rate for identifying these patterns. Because again, for these patterns, you have so many different types of patterns. Honestly, you have continuation patterns, you have reversal patterns, you have so many. And I'm sure if you put this even on a Google search, you're going to grab every single pattern that exists. But again, you may ask, what are the ones that you're going to typically come across, right? The most ones that you're going to 100% see is going to be the ascending triangle that's here, descending triangle. These are going to be like, you're going to come across them on and on and on. And more than probably, at least for me, when I see these patterns, I make sure to take them into consideration. And again, they don't necessarily mean that the price will go up or the price will go down, because when it comes to triangles, it's slightly more tricky compared to other patterns, because with triangles, the price can move up or down. It really depends on the breakouts, right? Whether it broke from its resistance or broke from support, right? So before I even consider a single chart pattern, I always identify, did it have a clear breakout, or else I would not take the trade. And this goes for all types of patterns, because no matter what, you need to ensure that we've clearly broken out of we've had a clear breakout. This is going to be essential for any type of trading that you do. And again, how do these patterns come? Again, how I mentioned before, I have another example here for you guys. You need to understand how how the candlesticks work again, right? So this is just a brief explanation to understand what these candlesticks mean. Like, for example, here on the far left, you have very bullish candlestick. There's no wick whatsoever, and when it's transparent, just for you guys to all know, this just for pictures only, this is considered green, just for our aspect, so you have understanding. So it's very bullish when it's like that. And then here on the second one, you see there is somewhat slight of a wick, but it's not as strong. However, it is still bullish because there's no bottom wick. So if there's a bottom wick, that means the sellers have got in control at one point and they managed to push the price downwards, right? So here the buyers were controlled. There was no sign of sellers. This is considered still bullish. And again, it gets less bullish as we go on. Like, for example, here the buyers were in control 100 times, but guess what? Even though it closed on a green candlestick, the sellers still managed to push the price down by so much. Like, you see this volatility that existed here. Even though the buyers were in control, the sellers still managed to get the price down. So this is basically the foundations of how these patterns work. It's literally all of these, any type of pattern you're going to see, it's combined of these types of signals. So when you have an understanding of the basics of how to read a single candlestick, then when it comes down to any pattern, you're going to be able to get the grasp of it, even if it's a pattern that you've never recognized before, right? Because it comes down from the basics. So this is something that I would definitely study before I even get into studying patterns. Because if you don't understand this, then again, there's no point in studying patterns, because no matter how many times you look at a different pattern, you won't know what's going on. So this is something that I recommend everyone in here to watch YouTube videos on, or else just consider this part here to be useless. And sorry if I'm very I'm very like honest when I'm speaking. I sometimes I don't put like a filter, but I'm just being honest. And as to chart indicators, you'll see so many like experts, let's say, who have their own YouTube channels. They'll be like, oh, use the RSI, use the MACD, use this, use that. Da, da, da. Okay, use them. Again, these are not like they don't rely on them 100%. These should be used as tools. They're not. It's not guaranteeing you anything, right? So just have that in mind. No matter what indicator that a trader says this is the next best thing, or that's the next best, and it's never going to be the next best thing. It all comes down to how you decide to create your trading strategy and what you want to put within your trading strategy. That's what you need to rely on. Don't rely on single indicators to tell you whether tomorrow the sky will be blue or the sky will be gray. And use these chart indicators to confirm for signals, right? You can factor them in also for your risk management plans. However, never take them as the key to solve all your problems, because it will never solve all your problems. But there are some very good chart indicators that you can utilize. Like for example, I'll just for a brief example, I'll give you guys what's it called? Which ones that you guys should focus on, or at least consider. Because by the way, the notes here that I have on this other, what's it called, presentation, is coming from a book that I read recently. It was about technical analysis by Rolf Scheltman, and it's a very good book. If you really want to understand how to analyze things even more, then I would recommend checking out this book. And I just put some of his notes on some slides, because I wanted it for myself, to be honest with you. But then again, if someone asks me, I try to send them to this one. But for momentum, because at the end of the day, for example, we want to see how, like, if there's volatility, not volatility, because sometimes it can be confused between the two. But if there's momentum within, let's say, I don't know, a pair that you're trading, these here would be a good solution to look into for an indicator to use. Again, you can switch them back and based off of how the market is doing. However, I would recommend checking out RSI. It shows you whether a product is oversold or overbought. And again, if it's oversold, it doesn't mean, oh, you need to go and short it. No, it means that maybe this potential product can be good to long in the future, because we are above the the benchmark, and the prices are most likely to increase upwards. But again, always take it based off of how you decide to do your own analysis. But RSI is pretty good, but never use, like, for example, RSI and MACD together, because they're doing the same job. So there's no point for you to use these two indicators together. Choose one. Same thing for trend, for identifying the trends. I love to use moving averages, because this is the basics. This is what everyone's using. So I would recommend using it, because more than likely, the type of trends that you notice, it's probably where the prices will push towards. Because if everyone else is using it, then, again, as I mentioned, psychology of trading, it's most likely going to act out. So I would recommend checking out moving averages, but sometimes I also use Bollinger Bands, because it shows me like where the prices could be stretching to, like the upper bounds or the lower bounds. It shows you that big time. Or that's what I would use for trends. And then for volatility, you could use even Bollinger Bands. They exist for volatility, because it does show you how far the price reaches upwards or downwards. So it's pretty good. I honestly use Bollinger Bands a lot. And then for chart studies, the personal one that I love to use is trend lines. Trend lines, 100%. I like I recommend everyone in here to have a clear understanding of how to use trend lines, because this is going to be the make it or break it for your technical analysis. So take a screenshot of this if you haven't, or note it down somewhere so you know how to build your own strategy. This will literally be the guiding stone for you to build your own strategy. When you have all of these in order, then you basically have a spot on trading strategy. So take a picture of this and research each one, so to see which one works for you, because I told you what works for me, but what works for me might not work for you either. And then moving forwards, for trading the trend line, this is also something that I genuinely think that you guys should all look into, because I personally, my trading strategy involves, as I mentioned, the support and resistance line, and also trading the trend line. I try not to trade against the trend line. For example, if you have an uptrend, do you all of a sudden want to go and short the market? Obviously not. If there's no clear reversal sign, it's better off you're longing the market, because that's where that's where the market is currently moving into, right? So these things are good to keep in mind, because if you try to do the opposite of what everyone else is doing, then more than likely you're gonna be caught up in the mess, in the fire, as I would mention. And then you have sideways markets as well. This happens, like, you'll be more than shocked of how much times the market consolidates, even in crypto world. And everyone would say, oh, crypto has a lot of volatility, and so what? But yeah, the volatility exists. But then we go into sideways markets for sometimes months at a time. And when we go into a sideways market, to be honest with you, I don't trade during sideways markets, because I don't want to be trading within these zones. I don't think it's enough gains for me. So I'd rather not be caught up in it, because it can have a reversal at any point in time. And I don't want to take that step. But maybe this is a good accumulation point when the market is going in sideways direction. Again, it really depends how long you want to hold your asset for as well. And then you have, like, of course, the downtrends. This would be good opportunities for you to short the market, but understanding how to identify the trend lines is gonna really help you big time. And this is something that I always draw within, and I always draw this actually when I'm in the daily chart. I always identify the trend lines, where it's going for. Like for example, I'm just gonna use the hourly trend mark, since I'm already here. But here I already see that it was a sharp upflow actually. This here is showing us that the buyers were clear in control, but I would just come in and draw it out. Trend line here, just as simple as, for example, drawing it out. Okay, that's not a perfect trend line, but it doesn't have to be perfect, and that's another thing as well. You can do it in so many different ways. I've seen traders who identify trend line being this way here, but then of course in the beginning you had it go in this direction. So here it showed me that it started to consolidate a little bit, but then it took a sharp turn. The buyers were the ones in control. So it shows me that, potentially we could have continued an uptrend, but again, it really depends if you have the clear breakout zones. This is just on the hourly chart, so I'm sure it will differ based off of how it looks on the daily chart. But then again, it went down into a downtrend, right? So drawing these out will help you see the clearer picture. I typically like to draw mine in the daily time frame, because I want to see how things are moving on average across all the months, to identify whether I'm going to have a potential breakout soon or not. Like for example, here, this is a clear trend line for us to see. The price was moving downwards, and then we had a clear breakout. You couldn't draw it in. I like to draw my trend lines together. I kind of like a channel, you could say. This is not the most perfect trend line, but you guys get the idea. And then here, this could have been a good trade actually. If I gotten, which I actually did for this specific trade, I did long it. I traded after it had its breakout. But here, you could say a lot of traders could have been here trying to long it, but again, they would long it once it has a clear breakout. Once it has a clear breakout against the resistance, then that's usually when they would long it. But again, for a successful trader to come in, they're not going to just trade strictly based off of the daily time frame. They're going to look for entry positions on the 4-hour time frame. They're going to try to read the candlesticks to identify any potential. They're going to try to identify any potential chart patterns. They're going to look into the chart indicators, as I mentioned before. They're going to try to see all of the support and resistance lines as well, where the price touched prior, did it break out, right? So these things a trader will 100%, a successful trader will be focusing on. So it's not strictly only about the trend lines, but it's also about the other factors that I mentioned. If you guys are taking notes, consider resistance and support lines, trend lines, chart indicators, and then chart patterns, of course. And moving forwards, so yeah, having a good understanding of this is going to be essential. Oh, this is just reminded me of something else actually that I was reading, what I was reading in one of my books, and actually I think it's a pretty good one. The Dow theory. So this is basically was made by, he was, I guess, what's it called, the reporter for one of the for stocks and crypto, not crypto, but I think he was a big reporter within the for the financial institutions and things like that, and he was analyzing charts and was analyzing, like, this was his part of his job. I forgot his specific what his job title was 100%, but I know he was analyzing charts and he was within the realm, and he came out with the Dow theory. And what it shows, it shows that market moves in trends, right? And those trends go through predictable phases that are driven by human behavior. So what he noticed was that here in phase one, you had where people were accumulating, right? Smart money was buying in, and then the price started moving upwards. And then once it started moving upwards, then that's when you had the public participation come in. So now everybody else is like, okay, the price is moving upwards, let me start buying now, right? They're buying. And then the price is moving upwards and more people are coming in buying. But then guess what? The smart money in phase three, that's when they started to sell slowly but surely, because now they're taking their profits, right? So they start to slowly sell during the excess phase, and also through the distribution phase, they start selling. And then public participation comes in again. That's when everyone now is panicking and they're starting to sell because they're like, oh my God, what do I do? The prices are moving downwards. And then people start continuously panicking and they start selling as we move downwards and downwards as well, until the market again pushes back upwards. This here, I recommend honestly taking a picture of this, because I saw this and then I started to just find these types of patterns during the markets themselves, like when I was analyzing for other cryptos that I wanted to invest in, and I saw this play out like hand in hand, and I was like, oh my God, this is what like the Dow theory was mentioning, and I see it happening in front of my eyes, right? So this is something that I would honestly say, like, keep this in mind, because it's gonna repeat 100 times over and over again, because this is again how humans work, right? So keep this in mind, because you don't want to be caught up in a public participation, right? Whether you're in a bull market or whether you're in a bear market and you don't know what's happening, right? And another thing that I want to mention to you guys that I think you should all have, like, you 100%, like, take a picture of this, go on CoinGlass. You can do this. I mean, I use this a lot for crypto, and I'm sure you can use this as well for gold, for commodities. For stocks, I'm not entirely sure, but I'm sure they have a category for it there somewhere. But this shows you, and I think they'll have for stocks as well. It shows you the liquidation heat map. Okay, no matter how good you are as a trader, if you don't have an understanding of how this is working, then you're gonna be wiped. 100%, you like it or not. And it looks confusing when you first look at it, but it's not that hard to understand. And like, for example, here, you're looking at BTC over USDT. Let's say as a trader, I came and I'm like, okay, I'm going to long the market and I have everything is in check. But then guess what? You see the yellow lines here? It shows us the liquidation leverage, right? So we see that the market movers are the ones who are going to be controlling the prices at the end of the day, right? No matter how good you have your analysis, the market movers are the ones in charge, right? So they're probably gonna make the price, let's say, move downwards once it comes to these liquidation areas. And then these people here are going to get wiped out, right? So now you know, you don't try to take, let's say, profits during this specific, like whenever the price reaches to 97,346 in that area zone, you know that's where the market movers are probably going to try to wipe out the people who are longing, right? So keep these zones in mind, because market movers will always try to wipe out the people that have, let's say, long positions, or they even have short positions, right? So you can see here, I guess in the bottom, it's not too strong because not a lot of people are shorting the market, especially since crypto now started moving upwards, but you have more people who are longing at the moment, right? So keep these in mind, because this is going to be, it's going to either break or make you. And to be honest, from personally speaking, I always keep these zones in mind when I'm going into trade, whether it's long or short, because I don't want to be wiped out by the market movers. So of course, I always keep this 100%, because at the end of the day, they're the ones who come and make the prices, not us, right? As like they all agree honestly internally, and then they'll drop the prices on you. That's how they make money at the end of the day. It's an exchange, right? So keep these things in mind and try to trade smartly. Don't try to trade without no understanding all the cards that you're dealing with. And then again, volume analysis is going to be a big thing as well. You can see if you have high volume, it confirms that you have trend strength. Low volume, of course, weak trends. And if you see that you have a rising volume and the price is going up, then you're bullish. Rising volume and the price is moving downwards, then of course you're bearish. And then when it's, flattening out, that's maybe a potential, that's consolidation 100%, or a reversal that might be happening soon. So these things are important to keep in mind. And as a trader, if you decide to do this, whether you try to become a swing trader or day trader, try to journal your trades so you can understand what you're doing wrong, what you're doing right. It will really help you. In my opinion, understanding your data is gonna be the way for you to excel, because if you don't understand what you're doing, then how do you expect yourself to become better over time? And another thing is, always have a stop loss. Never ever trade, especially if you're going to be doing leveraging or any of this types of stuff. I always recommend you have a stop loss set. You manage your risk properly. What I do personally to manage my own risk is I set up my own calculator that I made myself. And I would just put, for example, my account balance, how much it has. I would put the margin amount that I'm using. Let's say I'm using $650, for example. Then I put the entry price. I put the take profits, where I'm trying to take profit, and what my stop loss is, how much I'm leveraging, whether it's 10, 5, 6, or 7, or whatever it may be. And then it calculates everything for me, and I can see the potential profit and the potential loss that I can make within this specific trade. And I could see my risk to reward. I always try to make sure my risk to reward is above 1.6 at all times. And my potential loss, I try not to lose more than 2% per trade if I was to lose something. And what I also do is when I'm trading, I also I make it break even. Once I see that I actually crossed maybe 50% upwards or 40% upwards, then I will make my break-even point to be closer, and then I'll just let the rest ride. Because in my opinion, that's the best way to do things, because no one can 100% predict the market. So it's always better that you are prepared rather than you have one trade set in mind. You're like, I'm going to stick with this. I see the price moving in my direction now, and I want to make as much money. So don't be greedy. Try to take partial profits. It's going to help you out big time. And make your own risk management calculator like I did. Literally, ChatGPT helped me out with this. It's not rocket science at all. I had a few metrics, and then I just put it in, and khalas, that's what I did. That's what I do. And then avoid overtrading as well. If you see yourself you're losing, then don't try to go and reclaim your position again. Or if you see yourself you're doing super well, Don't try to go have more trades because now you feel like you can make more money. Well, you can, but don't let emotions get involved, right? So this is gonna be a crucial aspect. Never let emotions take over you. And I've had this happen to me before, and this is how I've lost before and how I've gained partially before. But try to take emotions out of the game and focus strictly on your plan. And 100% just don't be greedy. I've seen a lot of people become greedy, and that's when they lose the most money, when they start putting greed into the picture. And then define your trading strategy. My trading strategy is different from yours. Yours will be different from your friends. Try to make something that works for you, right? Some indicators don't work for me. I don't understand them. Maybe other people understand it, but for me, what's the need for this, right? It doesn't make sense to me. Does just because it makes sense to your friend doesn't mean it makes sense to you as well, or has to make sense to you. So make sure that you choose your style, pick your tools. As I mentioned, use that framework that I provided you guys with. Use it because it's going to help you identify what indicators you need. And then also use support resistance lines, use the trend lines I mentioned before. Check them out at least, right? Before you say no, check them out, see if they're going to work for you. And so that's basically really to wrap it all up and just, to just wrap it all up, know the basics of the candlesticks, as I mentioned, support the resistance lines, trends, use the volume and patterns, right? This should confirm the moves that you have for yourself, manage your risk, control your emotions, and of course, keep learning, keep using YouTube to help you out, or use Eduardo as a resource as well. Use a lot of communities, honestly, as well. Everyone can help you out. And really find your strategy. Don't try to copy everybody else's strategy. Find what works best for you. And you have us here as support, right? So me and Eduardo, of course, this is our job to help you guys out, right? So whether you're looking for help with fundamentals or technicals, don't try to do it alone. Try to look for resources for people that can help support you. Be involved. This is my biggest thing that I can say to you all is really, really be involved in communities and try to level up your skills. And for all of you guys who joined today, it just shows me that you guys all have like an eager to learn, and you will become a successful investor, whether you decide to focus on long-term investing or if you also decide to implement short-term investing as well. And when people ask me, to be honest with you, when they ask me what should I focus on, in my perspective, I strongly suggest you always have your long-term investments. This is going to be the most crucial aspects for you all. But then when it comes down to short-term investments, you can use this as you could say playing money, right? At least for me, that's how it began until I started to identify my strategy and what works for me. And then, of course, I noticed that, of course, short-term investing it gives you more gains if it's something that you're trying to make it into your full-time job in the future. It's something that can work out. Some people say, no, short-term investing is not for me. And that's because, okay, maybe they're not able to handle the stress that comes with it, because it's not a walk in the park. You're going to be on your toes, but that's why I enjoy it. I enjoy it because I'm able to be on my toes and I'm able to look at the charts. I enjoy it. This is even part of my day-to-day job, is to analyze charts and to do analytics, right? So this is, for me, something I'm passionate about. So always look, where are you passionate about? Are you passionate about watching it play out after 10, 15 years, 20 years? Or are you also passionate about seeing it play out after a few hours, right? So really, it depends on what your motives are in your life. And once you have your motives set, then you could choose which aspects you want to fall into. So I think now we have like 10 more minutes before the chat call ends. So if you guys have any questions or anything, honestly, or if you have any questions about, even if you're trying to learn how to start swing trading, feel free also to message me privately. I can help you out. I do this honestly for free, and I help all my friends out because it's something that I do this as a side thing. Like, it's not my full-time job or anything like that. So I'm 100% willing to help anyone who requires like further assistance. And yeah, so that wraps it up. That wraps it up for me today.
Fantastic. I mean, that was awesome. Thank you so much, Ethar. And for everybody, for those of you that who actually joined the call, and in case you didn't know already, but I've been making this point clear, is you can go to our school community and you will see a module that is on technical analysis, okay? And it breaks down many of the concepts that Ethar has been discussing today, namely resistance and support lines, moving averages, and all of that. So yeah, I mean, I definitely appreciate you coming here and just elaborating on many of these points, Ethar. And do we have any questions regarding today's session? Any doubts that you wanna raise about this? Anything? Anyone? No questions? Nothing? Okay, so I recorded this, so I will send you the screen recording after the call, Ethar. And yeah, man, I see you all in the group. Thank you so much for joining. Once again, I hope you managed to learn. Did you find it insightful? Any ideas that you want to bounce off of us?
I just want to go away and do a whole lot of reading. A lot of those words and concepts are really new, so I kind of want to go back and just go very slowly through it in my own time and work it out. Fantastic.
Awesome. So that's it, Ethar. You want to say something else before we close?
Yeah, thank you all for honestly being engaged in today's session. And if you have any questions, like in the group chat as well, feel free to message. And yeah, that's it really. Thank you all for your time today. And I hope that you learned something. That's all that's important. Thank you.
Thank you, everyone. See you soon. Bye.
Bye.
Thank you.